and welcome to Mortgage 101. I'm Lisa Dwyer, your host, and I'm here today not to sell you anything or tell you how great I am or how low rates are, but to try and help you reserve the best asset, your home. Try to save some money, show you tips on how to understand the processes around your mortgage. And I have a very special guest today is Ross Budin. Thank you, Ross, for coming.
Thank you, Lisa, for having me.
Yeah, you know, it's such an exciting business, the mortgage business, isn't it? It is.
It can be exciting sometimes.
Well, and I'm sure you're the same way. You like the part where you're helping people.
Sure, 100%.
Right. So, and as you know, people's home are normally their biggest asset, right?
It is.
It's very difficult to save money, that kind of money. So if you've paid your home off, or if you've try to build up your equity quickly. When you sell, or you just get that lump sum. It's really the only way that most people can get such a large amount of money at one time.
Sure, but the most important thing about it is it's a place to live. It's a place to raise your family, and it's all those memories that come with it. And it really is the American dream.
Yeah, you're right. And I'm so excited that you said that, because today's topic really is renting versus buying. And we're going to go over, the pros and cons of each. And I'm so excited to have you. Ross is with National Home Lending in Clarkston. And he's been in the business how long? Tell me a little bit about
almost 20 years now I've been in the business.
You look too young.
I know. I started young at the same time that I was going to college. So I was lucky enough to get that opportunity and start from the bottom and work my way all the way up.
Very good. Very good. All right, so the first thing we want to talk about a little bit, I know that you are so knowledgeable, and so I'm very grateful that you're here.
Thank you.
But you were talking about like the criteria required and how mortgages came about.
Sure, it's important to look back in history in some ways of where we were. At one point, you could only go to a bank to get a mortgage. And then the whole idea of brokers came about, where these people help guide you through that process in getting a mortgage, and then maybe they turn around and sell it to the bank down the road. Criteria at one point was very tough. The whole idea of the VA came out for veterans out there, also for FHA buyers and USDA too, which those ideas made it so you didn't have to write a check for 20% down.
Right, and that was how my parents always taught me, right? You probably are the same way.
Sure.
You're not going to be able to buy a house unless you put 20% down. Well, that's so different now. It really is. I mean, there's so many.
And that's changed, and but in some ways we've come back a little bit in criteria. However, we've all been very lucky that the government has been there to back up this paper, so all of us throughout this financial crisis are able to still go out and get a mortgage.
Very good. Now we want to talk a little bit about renting versus buying.
Sure.
And let's start with renting. All right.
Well, as we all know, you go out and you rent, you pay your monthly payment, and you're able to live in that home, apartment, and so on. But what we've seen is those rents push up so high in the last few years. And that's partly because landlords have bought up properties at very, very cheap prices, and they're turning around and saying, well, there's not a lot on the market, we can rent out for even more.
Right.
What that's doing, though, is it's putting those renters in a place where it's very difficult for them to save. So when you take a look and you're going to go rent a small 3-bedroom house and it's $1,500 a month, what do you have left over?
Right.
What do you have to show for it at the end of the day, too?
And what I would tell people is this, they would bicker about, if they had a little bit of credit issue and their rate was just a little bit higher. Mm-hmm. Well, I could rent, and I say, well, what's your rate then? 100%, right?
Right.
Your interest rate is 100% because you get nothing back. You're giving all the money to them. There's no, you get no return.
100%, and at the end you have nothing left.
Right.
Right. And it also makes it very, very difficult too, because I talked about family, I talked about those items a little bit before,
right.
And you want to be able to have those memories. And I look at my own family in our house. We've been in this house for almost 9 years now, and my son doesn't want to go anywhere. It doesn't matter that it's bigger, that it's better, that it's nicer, that it's on the lake or whatever. Nope.
Right.
This is the house he wants.
Because
and he wants
that's
it
what
forever.
he's accustomed to. Right. That's his memories. Right.
And that's something that everyone, I think, wants to build on to.
Yeah. It is true. I don't know if you moved around a lot when you were little, but
I did not.
I didn't either. And I hear about people, oh, we moved every 2 years. And you know, in our industry, we hear that a lot.
Sure.
You know, every couple of years, a customer will come back. You're like, are you looking to refinance? Or no, we're purchasing, we're selling. You know, I grew up the same way in my home forever. Yeah. Well, that's awesome. Okay, so we'll talk about rates a little bit. We'll be right back with Ross. We're going to talk about rates. We're going to talk about different options, VA loans for veterans, FHA, 203Ks. We have lots of great information, so we'll be right back. Thanks for watching.
Hi, my name is Ed Ratzenberger. The Oregon Center has a Seniors Advisory Council. It is a group of 12 people who volunteer to help the Oregon Center staff with their efforts to provide the programs and services of the Oregon Center for the seniors of our community. The center would like your assistance in order to help determine the activities and services that seniors prefer. The center is a comfortable and enjoyable place for you to visit, to meet with your friends, and to make new friends. You're welcome to provide your suggestions for activities and services, for your general observations, for your complaints, and for your positive comments. If you would like to give your thoughts to the Advisory Council, please stop by the Oregon Center and deposit your comments in one of the boxes that the Advisory Council has made available. If you want to include your contact information, we will respond to you within a few days. Or if you prefer, we also welcome and value anonymous comments. All contributions will be discussed. We hope you will respond, and we thank you in advance for your help. It is a pleasant place to enjoy and does not cost a penny to be a member. Membership in the seniors group is free. Thank you for your time. We look forward to hearing from you and to meeting you. Take care.
Thanks for watching. I'm here with Ross Budin today, and we are talking about renting and buying and different types of mortgages. Sometimes we may talk too fast because we're used to this business, and we may use words where you're like, what are you talking about? If that's the case, we do have a transcript of everything that we discussed during our shows. You can email me or call me. The number's 248-627-7283. Or you can email me at mtgsaver, S-A-V-E-R, @gmail.com, and I can get you in touch with Ross and get you all of the information that we discussed today. So if we get too excited, sometimes we talk a little fast, that is available to you. Okay, so we're going to talk about rates right now.
Sure.
All right, so talk to me a little bit about rates.
Well, obviously, if we go back and we look historically, again, I've been doing this for almost 20 years now, so I've seen a lot of rates. And then at the same time, I can go back and look at, say, our parents when they were purchasing homes. I know when my parents were purchasing their first home, my father was a veteran. He had the ability to do a VA loan, and rates were around 15–16% at the time. Conventional mortgages were about a percent lower. So they were lucky enough that my great aunt said, I'll loan you the money. You put down a little bit. They put down a couple thousand, and I'll loan you the money on a land contract in order to purchase it. But most people, that's the rates that they got. We then did see rates come down quite a bit. Obviously, the Federal Reserve is involved. And in doing so, we saw rates come down. everyone now has gotten used to, oh, rates are going to be 3-4%.
Yeah, that's not going to happen forever.
But we all have to be realistic. So
Yeah.
as a historic mark, about 7% is historically, across the years, a pretty average rate. We're still sitting in the 4s today on average.
Right. Yeah, people are so excited. And you won't believe the amount of home you can get for your monthly payment when the rates are low. So people are like, oh, I want to be around $400. And then when I tell them they can get an X amount of house because the rates are low, they're just so surprised.
Well, let's also think about it too. If you were to take money and you were to put it into the bond market today as an example and buy some bond funds, your rate of return is going to be 3 to 4%, right?
Right.
Well, that's what you're paying. So if you kind of reason it all out here and say, wow, I'm basically getting a rate that is at a much lower inflation than where we presently are right now, which gives you the ability in the future to pay it off. So it's nice to get a mortgage, but it's like anything. We want to see everyone be able to pay it off in the near future.
Right. We talk about Biweekly a lot on this show because I am very, very adamant about trying to help you save money. And how do you save money? By putting an extra payment of principal on your mortgage, or making a biweekly payment to try and get that paid off, 7 to 10 years sooner, saving thousands of dollars.
Lisa, I was really lucky to actually have a customer just recently who took out a mortgage on a home. They did owe some money and then owed some money on an investment property they had. They put it together. We were able to say, hey, look, it's a lot lower. And they wanted to put a big extra chunk of money every single month to it. So they took out a 15-year loan, but in putting that large extra chunk with the bi-monthly payment and the extra principal going towards it, they're cutting that mortgage down to 5.5 years.
That's awesome.
That's going to be paid off. So they'll have that investment.
Awesome. I mean,
they'll have the investment property paid off and their
them.
primary.
Yeah, that's
at the same time.
Awesome. That's great. Well, we do have a lot to talk about today, and I'm excited to hear about your VA loans. And we talked a little bit earlier about several different programs, but let's talk about VAs right now.
I think VA is the VA program, and it's for veterans, possible spouses of veterans that may have passed away too could be eligible. It is a really, really important program, and I think it's underutilized in the market today. We see a lot of customers that walk in and different items tip us off that they were a veteran. We say, are you a veteran? Well, yes. Because when you're going in to go purchase a home today and you're going to put anywhere from 5% down or 10% or even 15%, but you're not going to put that whole 20% down.
Right.
You have to start to figure out what is sensible. The rates on VA are normally very, very low. And that's because it's insured by the Veterans Administration for these veterans.
And I think, Ross, that a lot of people go into a mortgage company and they don't, either the loan officer is afraid to do a VA loan because they're not familiar, right?
Sure.
Knowledge, they just don't have the knowledge. Or they hear about the funding fee or something and that scares them away.
Well, let's talk about funding fee because there's multiple and every veteran has to take a look. So there's a first time use, there's a multiple time use, and then there is a no funding fee. So the no funding fee comes in for any of those folks that are disabled. And even if they're partially disabled, that no funding fee comes into play, which is real important because then it doesn't cost you anything. You actually can end up with a better rate in some cases than on a regular conforming loan where you put 20% down.
Right. That's just great. I think that if you find a good company, right, like for example, National Home Lending, right, they know what they're doing, and it's truly walking in and getting the best program that's available for you.
And that's really, really important, whether if you're a veteran, yes, if you're not a veteran too, and searching out what is right, and you should always ask for options. Because, like we talked about in saving before too,
Sure.
sometimes it doesn't make sense to put that money down. You might want to talk with your financial planner at the same time about this. And maybe it makes sense to do an FHA, put 3.5% down, or a VA and put 0 down.
Yeah, no, I agree with that. I do. And I think that with all the programs that are available now, I mean, when I started, it was, conforming FHA. Now you have rural development, 203Ks. There's just so many different great programs. So for the veterans, just so they know, they can contact you, contact me. We can definitely get them in touch with you. And
100%. I wanted to make another point about the VA, just real quick for everyone so they know.
Sure.
Everyone thinks that you can only go do one VA loan ever. That's incorrect. So if you give a call, we're more than happy. We have the system through VA. We can put it back through to see what that eligibility is.
Right.
But there are opportunities, even if you had done a VA loan 25 years ago on a purchase,
right. Some
and
people have said
now
that
you have
to
a
me.
conforming
I
loan.
already did a VA loan. Well, it doesn't work like that.
Right. Come back, and you can check to see what your eligibility is.
Right. Great. Well, thank you for that clarification. I think you're right. A lot of people think they do it once. A lot of people feel the same way about FHA, don't they? I mean, you hear about them saying, "Oh, well, I had an FHA loan back when."
And I think that's partly a stigma. Everyone thinks it's just a first-time home buyer's loan. Right. No, it's an everybody's loan. Everyone can get an FHA.
Right. It's for your primary only.
That's correct. Yeah. There are some instances where it can be used for a secondary if you already have an FHA loan on it and it's an investment property or secondary home now. In some cases, there are ways to reduce your interest rate in doing that, and we've been very successful in doing that for some clients.
All right, great. Well, we have lots more to talk about. We're going to go over FHA loans, 203K loans, and refinances for those as well. So stay tuned. We'll be right back.
We own a Habitat home.
I love working on my Habitat home.
Soy dueño de una casa de Habitat.
My neighbor is a Habitat homeowner.
Being a Habitat homeowner has changed our lives.
My mortgage payment for Habitat is less than what I paid for rent.
Habitat for Humanity of Oakland County currently has homes available with mortgage payments lower than most rent payments. If you or someone you know needs decent and affordable housing, call 248-338-1843 or visit our website at habitatoakland.org.
Prescription drug abuse is a national epidemic. The new in way to obtain drugs is through parents' or grandparents' medicine chests. Removing prescriptions from your cabinet is the best way to keep drugs out of the hands of our young people. We've got to work together to protect our teens, our seniors, and our environment. Clean out your medicine cabinet today. Please participate in Operation Medicine Cabinet and drop off your unwanted or expired prescriptions at one of our law enforcement drop-off sites in Oakland County. We can't ignore this situation anymore.
Welcome back. I'm with Ross Budin, and we are talking about mortgages and different programs. And Ross, I know we talked about FHA a little bit, but I'm sure there's something else you want to. FHA is such a great program. You want to go into the criteria of that a little
let's
bit?
talk. There's really three main parts. So I'll break down the three main parts on it. So you have your regular FHA type product. Consumer is either coming in to buy a home or they wish to refinance. So that would be your number one standard.
And the down payment for that is typically?
Down payment typically is 3.5%. Yeah. Customers can put down more if they want, and there is a monthly mortgage insurance that is sent that goes to HUD, which is Housing and Urban Development, every single month when you make your payment. That mortgage insurance will go down a little bit if you put a little bit larger down payment, 5% or more, and then there's a 15-year loan on it, and on the 15-year, it's staggered going down even further.
It's indicative to your down payment, for sure.
Exactly, or equity in the property at the time when you're refinancing, if that's the case. So that would be your segment one. Your number two would be people that are purchasing a home or possibly even doing a refinance that want to do work to the house. Right. Normally it's known as the 203K loan. And there are a couple different ones inside of that. There's a full 203K where maybe you're going to be taking walls out, doing roofs.
Changing the footprint is what I would always tell people. If you're going to do, a standard or structural.
So, and that can be done on not just a purchase, but on a refinance too.
Right.
And we've done that for a lot of folks. We just had a gentleman do it. He decided he wanted to put in a geothermal in his house, which is a $10,000, $12,000 deal.
And those are becoming more and more I mean, you'll see houses listed on the market with the geothermal, and those are big money saver.
So that's an example of that. Or if you want to do a roof at the same time and so on, and that's a different way of doing that type of loan. And then your third part, which is still pretty common and is still being done, and that's the reverse mortgage. So, which is a very, very good product for someone who is retired normally. The normal customer that we see is normally in their 70s, maybe 80s, and what they're trying to do is they're trying to get some money out of their home. A lot of times it's free and clear, or pay off their mortgage so they don't have that monthly bill, so then they can have some extra money for health care.
And reverse mortgages really is about getting the income early, right? You're taking your money ahead of time so that you're not leaving it so much for your heirs. You're taking it to live on. And because of situations that have occurred in your life, you may not have enough money to live on as a senior, is retired. Your Social Security is not enough, or you don't have a pension, and it is a way to help people for sure. But there are risks to reverse, so you want to just make sure if you are looking for a reverse mortgage, you talk to a specialist so that they can tell you both the pros and cons of those.
It's very important on those, so you know, to have the family involved. I think that that's one of the most important things. Every single one that I've ever done is, have you talked to your kids? Have you talked to the family? Have you, and even if the family wants to sit down with you at the same time, face to face, so we can explain that, I think it's very, very important.
Yeah, the last thing that you want to do is surprise the family. Something happens to you, and they go and think that they have, you know, a little bit of money coming from their home, from the parents' home, and it's not happening. Yeah, communication is pretty key, I think, for a loan like that.
It is.
All right, now let's talk about taking cash out for improvements, because a lot of people now, I think two things have happened. One, they're either deciding, you know what, there's not a whole lot out there to choose from. I want to stay in my home, or I like my home, I just want to do some improvements. How do I get money for that? It used to be really easy to walk into a bank and say, I want an equity loan. Well, that's not happening anymore. I think too many banks got burned.
Yeah, and I just heard the numbers. Equity loans are way down. So the numbers just came out today. Equity loans in December of last year, because we're always a couple months behind in the mortgage business as to what's happening number-wise.
Not mentally.
But those numbers are way, way down. And why? Well, a lot of times those are flexible lines of credit. People want something that's fixed. They want something that they know where that payment is, so they can go back and go pay it down. And maybe you need a new roof. Maybe you want to put a new kitchen in the house. But you do have the ability. So there are different rules. It all depends. So VA, veterans can come take cash out. The normal is, let's just say, up to 90% possibly of the value of their home. There are some standpoints where you can go a little bit higher for different reasons.
There's guidelines and stuff.
FHA, someone who may want to take out an FHA loan for it, it's 85%. And normally they're looking that you own that home for at least 1 year before you come back to take cash out. There are some rules once you've made it over 6 months, or if you wrote a check to pay cash for the house, you can come back and base it off of what you purchased, the purchase price was. And then you have your regular standard conforming. Most people, I don't advise to go over 80%, because if they do, then they're going to incur that mortgage insurance. And it's normally not sensible at that point to do that.
No, I mean, you could still get an equity loan from a bank or credit union. However, it's a lot more stringent. You have to have a higher FICO score. You have to have some assets. You have to have some money to back up the loan that you're going to take. And most of the time, that's why people need a loan, right? Because they don't have the assets to do it themselves. Well, thank you so much for being on the show
Thank
today.
you.
I really appreciate it, Ross. You're just awesome. Again, I just want to remind you guys that if there's anything that we talked about that you weren't clear about or that you wanted some more information, we would be happy to give that to you. And thanks so much for watching. God bless. See you next week. Bye.